If I were a 25-year-old boy or a man, whatever we say, the Gen Z population, wanted to get into my first step towards financial planning, what would be your one advice?
So I think a couple of things that are very very unique and picking up very very fast in the last say 3 to 5 years is fire concept.
The first myth that comes around is ULIPs being expensive. So let's start with that, and then we would definitely want to move towards that point to talk about how a strategy on the ULIP could be more passive yet active.
I realized actually the Indian economy is doing very very well. Right? Why not invest and participate in the India growth story?
Hello and welcome to the first season and the inaugural session of the Growth Chat powered by Primerica Live. I'm Karthik Chakrapani, your host, and I'm thrilled to embark on this journey where we shall be simplifying financial planning and spreading the word on financial literacy amongst all of the young Indians in the country. For going towards financial planning, it's a subject that kind of confuses many folks. It's not too straightforward. It depends upon the stage of life that you're in. And there are multiple options and multiple advisors who can guide you towards that goal. To help us unrattle this, to help us unbundle this, I'm pleased to say that we have Vivek Jain, the Chief Business Officer of Life Insurance from Policy Bazaar, a young achiever, a business builder, someone who can give us insights throughout his own personal stories, his own insights from his own experiences, a storyteller like me, and we will build this entire session on this entire storytelling format. Thank you, Vivek, for joining us and welcome to the Growth Chat series.
Thank you so much, Karthik, for having me here.
Vivek, let's start about talking about you first. You are a young achiever. You've worked across the spectrum of the business world. You yourself would have understood financial planning and financial literacy from your own perspective. Do share with us your journey of how you became a young achiever and what led you to get onto this path.
So, I think Karthik, talking about my own investment journey, I think when I started working, I also started savings like most of us do. I started investing whatever savings I used to have in FDs, and I have a lot of FDs which I started off with when I just came out of college. Then I think as our parents and relatives tell us, I also invested in a small property in the initial years of my career. But I think last 7 or 8 years, I have realized the importance of having a monthly investment strategy. And that is very, very important for anybody who's starting early or is in the starting of his career very, very young. The earlier they can start in a monthly mode fashion of investing, the better it is. I'll tell you why. And we'll come to what instruments I invested in maybe later in the show. But there were some investments where I was forced to invest in a disciplined manner, and there if I see I invested through COVID, through demonetization, and actually I have very very good returns. And there were other instruments where there was no restriction and I could exit, and in panic I exited maybe right after COVID first wave happened, and actually I did not end up making good returns. So I think one learning, if I look back in my career and my investing journey, is I think discipline and staying invested in the market is the most important. I think anything else doesn't really matter. Yes, the instruments will make a difference of some 1 or 2%, but actually spending time in the market and any investment, actually that's what really matters.
Amazing. I echo that, Vivek. I started my career in the armed forces. The first thing that anybody could tell me once I got commissioned was buy a life insurance and then get an FD. I think all of us would have had those as our starting points to begin our financial journey or our financial planning journey. You spoke about a little bit about how you shifted assets, right? From, let's say, real estate to FD to being more disciplined monthly. What were your trigger points or moments in your life journey which made you take those decisions?
So I think initially I was more risk averse, and then I was looking at more fixed and guaranteed returns, and that's how I started off with FDs. Then I realized actually uh, the Indian economy is doing very very well, right? Why not invest and participate in the India growth story? That's how I started investing both in mutual funds and in unit linked insurance plans provided by life insurance companies. And again, interesting part I'll tell you that while ULIPs offered by insurance companies have a 5-year lock-in, what it really ensures and helps you is that you spend time in the market. And I tell you, in 5 years and 7 years, it has been almost 8, 9 years since I started investing in ULIPs. They have given me very, very good returns because it forced me to invest every month, be it was demonetization, be it any war, be it any global crisis, be it the tariffs that we are talking about. I have invested every month, and that has kind of averaged out the investment and has given me very, very good returns.
So it's like saying that financial planning and health planning, fitness, are both about discipline and consistency. I think that's the theme that emerges out very well. And I echo what you're saying. ULIP's time in the market,
Yeah.
time in the investment does make a lot of difference. And definitely, unit linked insurance plans help you, force you to be in the market, to time the market. Rather than timing the market, let the market time your investments. Uh, at Policy Bazaar, you've spent a lot of time interacting with a huge cohort of customers, your analysis, plus your background with the business consulting. What are the key themes that you see are emerging in the young Indian investor community?
So I think the kind of lifestyle people have, especially in the urban areas, to sustain that kind of a quality of living, I think, and if you have to retire early, you have to really plan your life goals very, very well. So I think that is very, very important.
So there should be a fire in your belly to realize fire, right?
That's absolutely right.
But when you try and plan all of that, something that comes to my mind now, and I think it echoes the concerns that widely would be, realized by a lot of Indians, is that there is inflation, costs are rising. There is also the aspect of securing your income. So either you're in a corporate job, or you're working with the government, or you're running your own enterprise, or you're a gig worker.
Hmm.
The in thing these days with Gen Zs and millennials. So all of these kind of add on to each other. The rising cost, the fear of keeping the income stable, leads to a lot of stress, which is generally called as financial stress, right? And then what comes about is about matching what your needs are, or your lifestyle. As you rightly said, there is a different lifestyle or a enhanced lifestyle that an urban population of India is used to today as what it was probably 20 years ago. So that also adds to the entire conundrum, to say that how do you now start looking at financial planning? So, what do you think are the biggest stress points for Indians today in terms of the financial stress points? Because the survey by SBI Life Insurance in 2021 said that around 60% of the young Indian population is troubled or is bothered about the financial stress that comes in because of all of these parameters which are variables for them.
So I think the problem is on the extremes. On one side, there are people who are very, very risk averse and looking to invest in guaranteed instruments, and then there are very, very high risk takers, young population who are ready to invest in crypto, ready to do futures and options trading, which without fully understanding the risk associated with it. I think again, coming back to that, there is no way without consistency and without discipline you can actually make money. So I think working in extremes, future and options, unless you are an expert, which most of us with our working hours is very, very tough to actually be experts unless you have a real zeal for it. right? And a real understanding for it. I think taking too much of risk or being very, very risk averse doesn't really help you. You have to have a balanced portfolio, and also actually, like I said, be at it. Just like you were saying that for being fit and healthy, you have to be at it, you have to do it every
Absolutely.
day.
Absolutely. Uh, I want to pick on the risk averse aspect that you mentioned about that there is a significant amount of population that is risk averse, but there's also a slice of population that would want to experiment with or without financial knowledge. Interestingly, what came out is between the age group of 18 to 35, uh, via a report published by Niti Aayog in 2021, it kind of pointed out to the fact that 70% of the population of this age bracket was actually more risk averse when it comes to financial instruments or planning. What do you think is the reason of that? Is that more to do with knowledge, as you rightly said, or peer influence, or kind of, a more stagmatic mindset to be safe and sound?
I think it's more to do one with lower financial literacy. People are not aware of the instruments and options that people have, and then they go by what peers and relatives talk about. And a lot of them, like you said, learn from their people at home or their relatives who have maybe invested in traditional instruments like fixed deposits, and basically they, and even property, a lot of money in India is actually locked in properties. And a lot of times, unless you really find a good investment there, sometimes you actually end up making very, very low returns. And it's a asset that is not very, very liquid to when you are in need of money.
So, interesting take. One, we watch out to the millennial population, which says that 67% of the millennials are not wanting to have a home ownership,
Yeah.
and they're happy to rent out. Uh, and if that be so, then real estate could be an investment vehicle rather than an capital ownership vehicle. Uh, if I were a 25-year-old boy or a man, whatever we say, the Gen Z population, wanted to get into my first step towards financial planning, what would be your one advice?
So I think if you are a 25-year-old, I think you should start. I think starting early, there is just no substitute for starting early. See, if you are a 25-year-old, right, and if you can even invest, say, 5,000 rupees a month, and that can, you can keep increasing that as your salary or as your income keeps increasing. If you invest that for a 10-year or a 15-year or a 20-year period, I think at even at a 15% return. So there's a thumb rule, right? 15,000 rupees invested every month for 15 years will at a 15% return, which is what historically the Indian stock market has broadly given, roughly in the range of 14 to 15%, give or take. That kind of creates a 1 crore corpus. That's actually the power of compounding that a lot of people miss out on.
It's like, let me share something very personal to me, and it kind of echoes what you said, Vivek. 2007, I was out from the army, trying to find my feet in the corporate sector. Completed my education, my first job. I was starting out my first job in the corporate sector. Uh, Met across a financial advisor who told me about ATC,
Hmm.
and he said, you got to take that benefit from a tax perspective. 10,000 rupees in a ULIP is what I invested then. To be honest, not fully understanding what the ULIP was. I knew there's a life cover, there was a critical illness cover, there was a personal accident cover, all said and done. 10,000 a month from March of 2007, Vivek. I continued that till February of 2025, which was a good period of around, let's say, good 18 years. 10,000 every month religiously, kept going.
Hmm.
And it was like fill it, shut it, and forget it. And that's what I did.
Yeah.
And I exactly made that return as what you kind of said. And the market had seen multiple cycles in these 18 years. It saw the recession of
Yeah.
2008. It saw the boom of 2018, 2019. It saw the COVID era, and it saw the post COVID era. So, four big milestones in the market were visible. But I did exactly this. Thank you. So I think I would really say that I am a testament of what you just said.
No, no, I think absolutely, absolutely, and I think the way Indian economy is shaping up, while there may be some volatility from the last 9 to 12 months, but I think are fundamentally the Indian economy is doing very, very well, and that is actually that can be seen in how the quarter one growth numbers are actually better than what were expected and projected. Right. So I think if we really believe in the India growth story, I think just keep being invested in the market linked instruments really will give us very, very good returns.
Great. Uh, Now let us take a little segue into the instruments or the financial tools that are available. We could call it avenues, we could call it instruments, we could call it tools. Early on in the conversation, you did mention about your own journey, where you said you started with FDs, a little bit of real estate, and then you got into equity through mutual funds, ULIPs, etc., etc. Given in comparison to our global landscape in terms of the number of instruments available globally in a developed market, and when we compare that in India, we would categorize ours into six broad categories. They may be tad lesser than what's available in a developed market, but let's look at it as you said: FDs, safe and sound investment vehicle. You've got mutual funds, which are structured investments, I would call it, market linked in terms of return profiling. You've got direct investing in the stock market, which could be short versus long term,
Yeah.
depending on your approach, high return, high risk. And then you've got ULIPs, which are the new babies on the block. I would say fairly new babies on the block, which also offer you the market signature and yet protect a lot on the downside. And then you've got real estate, which is there. And for your retirement, if you want to realize the fire that you want to realize, you've got NPS. So, amongst these six, while they are far lesser than what is available globally, it still confuses investors as to what to adopt for what need or what goals. So, how would you say that? How can a young investor, rather than getting overwhelmed by these numbers or the amount of options available, can clearly simplify that and start investing?
So let's break it down. I think right. See, if you want to invest some part of your money in guarantees, I think fixed deposits are a very, very beautiful asset. They'll give you about 6.5%, 7%, and they are very, very liquid. In case, so they can actually serve as your emergency corpus as well, because at a click of a button you can get that money back, and you get 5 to 6% returns. And this is more, I would say, keep that as a emergency corpus and put some money in fixed deposits. Direct stock investing is something, depends on if somebody is aware, financially aware, can do their own due diligence, understand how investing works, only then one should venture into it. uh, for short term goals, I think mutual funds are a very, very good instrument if you are looking for a 2 3 year short term goal. Uh, but if you are looking at life goals, be it for your own wealth creation, be it for your child education, or be it for your retirement, I think ULIPs are a very, very good instrument. And I'll tell you why. And this is something, unfortunately, people are not very aware about. Right, people think that so ULIPs, for just simplifying it for our audience, ULIPs are basically market linked investment policies offered by insurance companies, which can have debt and equity funds at the back end, and they also provide typically 10 times of annual premium as the life cover. Right. So, and I think one thing that people don't know about ULIPs is, if you are investing up to 2.5 lakh rupees annually, the maturity that you will make will be completely tax free. No LTCG, no STCG, which is a very, very big plus. And 20,000 rupees monthly, because 2.5 lakhs annually broadly comes to 20,000 rupees monthly, right? For a retail investor, for somebody who's starting, I think that's a very, very good amount. And what the 5 year lock in ULIPs really forces you to have that discipline of investing that money
Spend
every
time in
month.
the market.
Yeah, yeah, yeah. And one more interesting thing, I think, see, there has been a lot of volatility in the last 1 year, right? What the beauty of ULIPs is, in one single product, you will have 8 to 10 fund options. You can move your money from a mid cap fund to a large cap fund to a debt fund. If you feel that the market is going to be volatile, you can move your money to a debt fund without any exit charges, without any tax implication.
The multiple redirections and the switches.
Yes, and in the new age ULIPs, like you were talking about, there are no charges for this.
Right.
You can do this online at a click of a button. And when you think that the market is again stable, you can move back your money to mid cap funds. Even small cap funds are available, even multi cap funds, even flexi cap funds. All types of funds, depending on your risk appetite, is available within one product.
On the retirement front, I'm still on mutual funds and combination of a few saving instruments that will help me build my corpus. But my eyes are right now on the NPS from a deaccumulation phase. So I think whatever you mentioned about ULIPs and other instruments kind of aligning to the life goals, this is a topic that I want to pick out now, Vivek, is that how do you align your needs and life goals with different instruments? And that's something that we'll pick on in a minute. But for the audience and for the general population, there is a myth about ULIPs being very complex in nature. Could you unmystify that for everybody to say that why is it not any longer complex, or is it something that one should understand?
I'm glad that you brought this up, Karthik, because this is something that I think our viewers should definitely know, and unfortunately, people are not so aware about this. See, unit linked insurance plans basically have four types of charges, and this is something that used to happen earlier. There was a premium allocation charge, there was a policy administration charge, there is a fund management charge, just like what we have in mutual funds, and there is a small life cover charges, which is called mortality charges. In the new age ULIPs that we have, there is generally no premium allocation charge, which is zero. Policy admin charge is also typically zero or very, very small. It may be 30, 50 rupees a month. Uh, Fund management charges are also capped at 1.35% for equity funds, and for debt funds, it ranges about 0.8 to 0.9%. Mortality charges is very, very small, and typically a lot of plans also return those life cover charges at the time of maturity. So in a way, now the new age ULIPs are very, very efficient from a cost structure perspective. The other benefits, like we were talking about earlier, there is free fund switching. You get to invest in 8 to 10 funds. You can actually allocate 10% in each. You can keep switching without any charges between a large cap fund or a mid cap fund or even a debt fund. Right? I think that's a very, very big thing. And up to 2.5 lakhs of investment annually, the maturity amount is also 100% tax free, which is another very, that kind of covers up for all the charges, much more than all the charges that you would have ever paid, even for your life cover.
Very beautifully articulated, Vivek. I think for everybody here listening onto the show, what Vivek has done beautifully is unboxed the ULIP in a very, very nice manner. A very critical part about this entire unboxing that Vivek did about new age ULIPs is also because of a lot of regulatory oversight that came into this product from 2010. The intent of the insurance regulator was to make this product simple, easy to understand by the customer, and much more customer friendly. So these have led to all of these enhancements that Vivek just mentioned, and thank you for doing that. Now let's get back to the point of saying how do you match your needs, your life goals with all the available investment instruments in the market. So for a young investor or a young Indian who's starting out his investment journey, how would you advise them to go about their goals, whether it is fire, whether it is child's education, whether it is to become a homeowner? whether it's to build a corpus of savings. So, how do you match them?
Sure. So I think, see, if you have some short-term goals of maybe say buying a car or a bike after 2 3 years, I think you should go with mutual fund and SIPs, because I think they are more liquid, and you can actually exit them with the STCG or LTCG tax in 2 3 years. But for life goals such as child education planning or for your retirement, I think ULIPs are a beautiful instrument. And I'll tell you why ULIPs are a beautiful instrument for your child education. There is a feature in ULIPs called the waiver of premium. What it means in simple terms is, even if you have paid 1 month of premium, you have bought a policy for your child's future education, and God forbid something happens to the policyholder after the first month, the future premiums will be paid by the insurance
Insurer.
company.
Yes.
Which, if you would have invested through a mutual fund, whatever money you would have invested till then will only compound. Here, if it is a 10 pay policy, so there are 120 installments. After paying two installments, something happens to the policyholder. Next 118 installments will be paid by the insurance company. So even if the policyholder is not around, the child's education, the goal, the dream of sending your child to a good college, right, is secured right after you buy a life insurance policy with the waiver of premium. I think this, I feel, is the most powerful investment option that a ULIP provides.
It's very apt, and I think I would just want to double down on what Vivek said about waiver of premium. For everybody listening on to this, imagine a mother and a father buying a child education based gold based ULIP policy for their daughter or their son. The father is the funder of that policy in terms of it, he being the proposer. And let's say there's an unfortunate incident where the father does not survive after a few years of paying for that policy. The mother of the policy would not have the burden to figure out the premiums that she would have to pay to continue this policy, which had an end goal of kind of, in a way, furthering the child's education or funding the child's education. The policy funds itself, let's call it that way, because of this waiver of premium rider that was built in, which means the insurer takes the charge of kind of continuing the policy. So, as a surviving member after the death of a loved one, there are 100 things that pressurize that surviving member. They have to figure out their life forward, they have to figure out many other things while they keep missing their own partner or their spouse who they were dependent on or they were codependent on. So, one worry out of that bucket list of worries is what this product brings in.
Yeah.
Uh, we also spoke about funds, right? You spoke about the flexibility that a ULIP offers for you to switch between funds, right? Equity focused funds to balance funds to even, let's say, debt funds, which in a single mutual fund is not possible. If the mutual fund is not right now serving your benefit, you would have to redeem that mutual fund
Yeah.
and then look for a mutual fund which would have a balanced fund or a debt fund. You cannot have the same benefit of having multiple asset funds in a single AMC, right? And that's the benefit that ULIP provides. Do you want to talk about a little bit about the mid cap funds that are today a flavor in the market? And just to kind of edge you on, we would want to talk about a little bit about data that I could see was that the Nifty Mid Cap 50 average 3 year return was around 22% compounded. And at a 5 year return scenario, it was 27%, which is far more healthier, rather double than its peers on the large cap as well as the small cap funds. Our own experience at Pramerica Life of the mid cap 50 correlation fund, it's a pretty long name, was launched in July 2023.
Yeah.
We are kind of looking at a CAGR of 20.2% from that time on, since the time we launched that fund. What's your view on this?
No, I think absolutely. I think mid cap funds and mid cap index funds, like the one that Primerica Life has, and it has given excellent returns in the last 2 3 years since its launch. I think they are a very very good way to really participate in the India growth story. And I think in long term they can really create very good value, because 23% kegger which you're talking about the fund that Primerica Life has, the mid cap correlation fund, 23% means every 3 years you're doubling your money, which over a 20-year period you will double your money every 3 years. So basically 6 times it becomes, in a way, 2 to the power 6, 64 times the corpus that you have invested. That's actually the power of compounding, and again, power of staying invested. So I think mid cap funds and like your mid cap fund, which is doing very well, very good instrument to participate in the India growth story, because those are companies who are in there, who are stable, because they are mid caps. They may not be as volatile as small cap companies, but they still have a headroom for growth, so they will give better returns than maybe large cap companies, which are more stable and larger companies.
So we covered child education, we covered about initial savings, we covered about home ownership, if that is a priority. Let's now segue to retirement. Now, for retirement, there are no classified vehicles that are very well known. One could talk about using your PF fund to accumulate. One could look at, driving accumulation through, let's say, mutual funds or other saving instruments. What's your view? Can ULIPs add on to that portfolio? Can ULIPs be a powerful investment vehicle towards retirement planning also?
So okay, I'll talk about, so actually ULIPs have another variant which focuses for retirement planning, which are called the pension ULIPs. uh there the regulation is slightly different, so it has all the benefits of having 10 fund options and switching, all of those things are there. Apart from that, any amount that you invest, you can withdraw 60% tax free, just like NPS, and 40% you have to invest in a annuity where you can get a monthly income. So it is a instrument that is like NPS, but with far more flexibility, because in NPS you can only invest in equities up to 75%. In a pension ULIP, if you are young, you would want to have 100% equity exposure.
Correct.
So you can go up to 100% in equity funds
You
through
could
pension
tailor as
ULIPs.
per your own risk profile.
Yes, yes. And actually NPS, the one thing that I really don't like, while I also invest some bit of my savings in NPS, is that I can only take it out at 60. While in pension ULIPs, if you are a 30-year-old and if you want to retire at 50, you can take a 20-year policy term and take
So
that money
ULIP
out at 50.
pension would help you realize your fire, as you said,
Yeah.
and maybe the NPS may not allow you to realize your fire.
Yes, yes. So I think NPS is a beautiful instrument. Again, I would reiterate that. But personal preference would be towards pension ULIPs, because they allow me to retire early and also initially have 100% equity exposure. And I think one more thing again, which I would like to talk about ULIPs, is there are strategies in ULIPs where actually bases your life stage, the equity and debt component can keep changing automatically. So for a passive investor, for people who really don't have the time to do their own research, you can actually invest in a strategy where you start with 100% equity, and every year that component can keep changing, or even your returns, whatever profit you're making, that can keep going to debt, and you can have your profits always safeguarded. So there are a lot of interesting strategies as well in
So,
ULIPs.
this is an interesting strategy, and I would want you to hold on to this because this would what we would want to kind of even unlock how to do that automatically. But before we go to that point, one thing that comes about ULIPs in specific are a lot of myths that kind of surround that. While during our conversation, you've been trying to break that myth at every stage, talking about various benefits and features of ULIPs. But the first myth that comes around, where people with a lot of knowledge about financial instruments also kind of sometimes talk about this, is being ULIPs being expensive. So let's start with that, and then we would definitely want to move towards that point. to talk about how a strategy on the ULIP could be more passive yet active. But let's start with the fact that why are ULIPs considered
So,
expensive?
as I talked about it earlier, right, there are four types of charges. But as you mentioned rightly, that after the new regulations in place, the charges and the net reduction in yield, basically the net cost to the customer, that has been capped to 2.5%. Right. And there also in the new age ULIPs, there are no premium allocation charges. There are no policy admin charges or very little policy admin charges. And there is fund management charges, which is capped at 1.35% for equity funds. And there is some bit of life cover charges because you get a 10 times of annual premium as the life cover. But a lot of new age ULIPs are also returning the life cover charges.
Absolutely.
So
Exactly.
actually, what you are ultimately paying is just the fund management charges.
So what's actually happening, and very rightly is put on, is that when ULIPs charge for mortality, they charge for mortality for the first 6 to 7 years. As and when the policy holder or the life insured survives, that mortality becomes nearly zero, and
Yes.
even those charges at survival kind of get returned back. And it's all about probably committing to certain expenses on day one with a clear sight of you remaining invested
Yeah.
in the game, be in the market, and getting those expenses back along with great returns.
Absolutely, absolutely, and with a lot of flexibility in funds.
Absolutely. Now, I don't have time. I'm an Indian. I'm a young professional, or I'm a mid career professional. My work keeps me occupied day and night, but I want to be investing. And I've chosen ULIPs as a vehicle because I want the vehicle to work itself. That comes the point when you talked about the investment strategy. How can a ULIP work itself and kind of free me from the worry of managing my investment on a day to day basis?
So see, there are two, three types of strategies that ULIPs have. One is a investor selectable strategy where you decide which funds you want to invest in, and you can switch funds without any charges. You can redirect your existing portfolio and future premiums as well. The other is a wheel of life kind of a strategy, and a different ULIPs will call it by different names. But what wheel of life means is that you say start, if you're starting at a younger age, you start with say 100% equity, and every year that allocation may keep reducing by 5%, say for example. So basically when you are nearing maturity, if it's a 20-year policy term, right, by in the last couple of years you will have almost 90% money going into debt and about 5 to 10% going into equity. So it, in a way, it kind of safeguards the upside that you have created over years. Then there are other strategies where you can say that if I have invested 100 rupees and after 1 year that becomes 112, put my 12 rupees in a debt fund so that my profits are always secured, and keep my 100 rupees invested in equities.
My principal keeps getting invested, my returns start getting into a different wallet,
Yeah.
which is like a debt wallet, which is secured.
Yeah.
I'm realizing the money that I've already made in terms of the profit.
Yeah. So depending on the risk appetite and do you want to be an active investor or a very passive investor, I think you can choose that with ULIPs. And even one more new trend with in the investor selectable strategy, where you also have index funds like the one that you have,
Right.
right, which kind of replicates the mid cap index. I think that's a beautiful way of passive investing
Yeah.
because you just have to put in your money and the fund manager is actually replicating the mid cap index for you.
At the cost of repeating, I think the unlimited options of funds in one single product and the unlimited switches and redirections that one could do. For all the listeners, switches are when you're switching from one fund to the other fund for free of cost, which is switching from an equity fund to that of a debt fund, or vice versa, or switching to a balanced fund. Redirection, when we say, would mean that today, as Vivek also pointed out, if 100% of my funds were going towards an equity fund, from the second year onwards, I would want to redirect 20% of that towards the debt fund, but keep the remaining 80 stuck onto or invested in the equity funds. So that feature or that phenomena is called redirection. I think that's an amazing feature. Now, talking to you, Vivek, the Chief Business Officer for Life Insurance of Policy Bazaar, or PB FinTech being the mother company, I cannot let go of technology not being part of that discussion. Now, when we look at investors today, right, they would need advice on the kind of assets or the investment vehicles to be used. They would want someone to unbundle each of those investments, like the way you've unbundled ULIPs today very beautifully. This means there is a personalized advice that is required. And in this age, whether depending upon your life goal, depending upon your age, depending upon your situation of your stage of your life, let's call it, or milestone of our life, one would need differential advice. So, how can we integrate differential advice today? Because in our times, advice was face to face.
Mm.
Advice was an advisor who had relationship with us, who could come and help us unbox, unbundle, unclutter all of these aspects about investing or financial planning. While that still is the mainstay today, how can technology be used to kind of give this personalization and the right advice that one would need depending upon this stage of life?
So I think if you have to really basically compare plans, I think digital platforms like the one we have at policybazaar.com can really help you in an unbiased manner compare the options that are available. You can look at child plans, you can look at retirement plans, you can look at wealth creation plans, and compare them very very transparently, both on the cost side and also on the historical return side, because these are the two main actually things, right? One, you can look at historical returns that the funds have given. Yes, they may not replicate the same in the future, but probability, if they've done well in the past, they should do well in the future. uh, right, and you can also look at transparently compare the charges of any product on the policybazaar.com website. So I think for new age people, people don't want to meet a lot face to face, they want to do their own research. I think they can look at our website for doing their research. Our advisors can actually also get onto a video call with them and explain them all the features. So I think that is something that a lot of our consumers, especially in the even in the actually what one trend that we are also seeing is this video call thing is not only becoming very very popular in the metros, but even in tier 2 tier 3 cities.
Yes.
Our traffic on our own website is moving more towards tier 2 and tier 3 cities, and they are very very keen to get on a video call, understand, compare, ask a lot of questions, and basis their life goals, pick up the right plan for them.
Absolutely. We've seen a lot of penetration on smart devices in the rural India. And one of our experiences with our microfinance business is that microfinance consumers, who are basically small or really small, ultra small enterprises within rural India, could be agriculturists also, are actually doing digital payments and are also looking at digital onboarding journeys. That brings me to the second question. So, you spoke about technology acting as an advisor, a personalized advisor, which helps you compare the entire spectrum according to you and gives you the right advice while also giving it as a freedom at your fingertips, using the technology tool at your fingertips. Do you also think that given our fast paced lifestyle today and the lack of time that we all spoke about initially, technology also gives a boost in terms of able to do an onboarding or buying journey seamlessly with limited time, which could have been, let's say, a little more protracted had it been a more offline, face to face kind of a journey?
Yeah, yeah, definitely. Now I think with the CKYC and the EKYC options available, you can actually finish the journey in straight 10 minutes. Once you understand and you make the payment, you have to just do a digital KYC and just quickly fill the proposal form, and next day you can have the policy ready in your inbox. That's how fast now policies can really get issued. And I think earlier it used to be like a paper pen kind of a proposal form, and somebody coming in and somebody helping you with some paper. I don't think now with the digital KYC formats, I think it's very smooth and very 100% paperless.
Right. So technology does play a lot of role, and I kudos to Policy Bazaar to have
Thank
started
you.
that journey and leading the flag as a flag bearer in the industry. As we kind of plan to wrap up the session today, I would again come back to the two questions, one of which you did answer, but want to kind of reiterate to our young Indian population. If I'm a young Indian, I am starting out my career. What's that one advice that you want to give them?
So I think two things. While Karthik has asked me one thing, but I'll give you two things. One is start as early as possible so that you have more time to plan your investment and be disciplined in that investment. The other thing, I think, while we're talking about ULIPs, I think one other thing that is very important is definitely when you are starting out, definitely look for buying a term insurance plan as well, because that will go a long way in protecting your family. Apart from, I think, investing and creating corpus, I think term insurance is also very important early in your career, because it's way cheaper than when you buy it later in your career. I think that is those are just two things that people should definitely
No,
uh,
I think it's very valuable, very precise to the point. The second question is I'm a mid career professional. I'm somewhere in my mid 30s, late 30s, early 40s. I've not yet structured my life around financial planning. Where do I start?
I think at in mid 30s, when you maybe have a family and you have kids who are maybe 5 years old or 10 years old, depending on where you are in your life stage, I think planning for your life goals becomes very important. You should definitely plan something for your child's education and then subsequently for your retirement. And for every, I think for every life goal, maybe you can have a life insurance policy with waiver of premium, which will kind of ensure that even if something happens to you, your life goal is always secured,
Right.
which I think is very important.
Thank you. Thank you, Vivek. Really insightful discussion. I think very more personalized is what I would say the session was all about. Your conviction around investment, financial planning kind of brings out your personal passion towards this space. You spoke a lot with your experience and you kind of delved deep into what your personal experiences were. And you really unboxed and decluttered the entire myth about financial planning being too tall a task for anybody to kind of embark on. I For all audiences and listeners, I think our first session was about demystifying the entire myth that financial planning is a mountain that needs to be kind of treasured and climbed on. What Vivek helped us do today was simplify the entire aspects of financial planning. The second goal I think we would achieve today would be about, breaking the myths about unit linked insurance plans. How unit linked insurance plans can serve multiple purposes depending upon your milestones. So as we wrap up today, I would want to reiterate what the goal of this entire growth chat was: to make it simple and to make it easily permissible and understandable by every Indian who wants to get into financial planning and wants to secure their future. We at Primerica Life definitely believe that simplifying the financial aspects is the first step, promoting financial literacy is the second step, and reaching to each part of that country to make financial planning, financial instruments, financial products, insurance products available for every person in the country of Bharat is something that we would really want to live on. Thank you for listening to us. Thank you for watching. Thank you, Vivek, once again. an extremely insightful discussion today.
Thank you. Thank you so much, Karthik.
Thank you.